Mayuresh Joshi now joining us, Head of Equity Research India at William O'Neill. Mayuresh, very good afternoon, and it's turning into a good afternoon. From what was looking like a very choppy morning and quite different from what the day seemed like yesterday. So first I want your take on where you think the strength is coming from and what really has changed in the mood. Do you think it's a realization that yes, a little bit of a cut is an opportunity to enter the market? There is enough dry powder waiting on the sidelines.
Afternoon, Tamanna. Yes, that seems to be the case. And a lot of cash is waiting on the sidelines, both domestic money and a lot of foreign flows as well. Having said that, the kind of fall that we saw in the markets yesterday, more of profit booking, if one has to believe. And a large part of the structural story that India is going through, both from a macro perspective as far as the developing and the emerging world is concerned, and the micro perspective where earnings are holding up pretty nicely. I think a combination of both these factors is not going to change the structural landscape that India is going to go through in the next few quarters. China is going to take some time to revive, and till that happens, fund flows in the scenario of a rate cut possibility in the second half of the next calendar year will also mean more flows coming into India. Broad markets, yes, have been overextended in certain pockets, but to a large extent, I think the exuberance for Indian markets might very well continue.
Mayuresh, any view on the space and the kind of statements which both companies have made? The good thing is that there is disclosure. The good thing is that they have to provision for everything. At least in IIFL's case, they're not provisioning for a maximum of the amount, a majority of the amount, unlike Piramal Enterprises. Any views here?
No, so I think the street will want to take this in the stride till the December quarter numbers are out, and specifically what has been undertaken in respect of the investments that they have probably done. So I think to that aspect, the street will still have some elements of doubt on how much is the actual amount involved, how much is provided for, and what kind of a hit will one take in terms of balance sheet because of the provisioning. Obviously, I think individually, if you look at the standalone numbers, Tamanna, for PEL in particular, what you probably expected to see or were expected to see in terms of the drawdown of the wholesale book and expansion of the retail book per se, along with the acquisition of the DHFL book that they've probably done, and the provisioning on that book as well. I think there is some way to go on that aspect as well. And on that aspect itself, I think to have a higher multiple given, the street wants to see some consistent performance. Add to that what probably comes through in terms of elevated provisioning on this count as well. So to that extent, wait and watch for both these counters. I think the top rung NBFCs are better off at this juncture.
On today's listing, INOX, down listing again. Some of the IPOs which shut closed yesterday for subscription had some brilliant subscription numbers, including a jewelry company. Never mind the concerns red flagged on social media. Any thoughts here on any of these?
I think it's just crazy out there, Hiraj. And I would totally agree with what Hiraj had to say. I think the frenzy surrounding IPOs, because there is such a feeling of missing out on the humongous rally that we've probably seen in the last few weeks. The kind of subscription numbers are mind-boggling. Having said that, with the subscriptions and the kind of openings that these IPOs are getting, the valuations that they are trading at are just not sustainable. I'll just give you a very quick example. Yesterday, Domes listed at a significant premium. Now, if you look at what Domes listed at and the existing market for both pens, pencils, highlights and markers expected in FY25 is close to 9,500 crores. Domes market cap yesterday itself was around 8,500 market. So somewhere I think there is a huge mismatch that is probably happening at this juncture. Valuations are out of whack. And if they are not able to, for some reason, sustain the kind of earnings momentum that the stocks are now opening at in the subsequent quarter or two, you can probably ensure or see a significant amount of crackdown happening in prices. So just not sustainable for INOX Wind. Obviously, the spaces that they are in, cryogenic technology is something which is going to pick up big time over the next few years. Obviously, the usage in terms of this technology and the product mix that they've got has ensured that the top line growth has been consistent about a 20 to 25% mark for the past few years. Margins have been relatively stable as well. And because of that, I think the kind of order book, if I'm not mistaken, close to 1,000 crores, is only expected to increase going forward, giving revenue visibility. But again, the kind of listing that it has maybe the revenue growth path is out there over the next few years, but it does need to settle down. And therefore, I think if corrections do come through, or it does make an IPO base as we look at it at MarketSmith India, it would make sense. Not getting into the frenzy of getting into IPOs after such heavy and good listings that forward.
Have you stayed away from all the listings or any that you found interesting at all? I mean, some would say you can't paint everything with one brush. So have you found merit in any of these companies? And any that you feel you would definitely stay away from?
So again, Tata Tech was a very reasonable one, but look at where it opened up, Tamanna. So I think there is no way that you're going to chase Tata Tech after a 125% opening. Flair, Dobbs, they're in good spaces because what you're probably looking at for the organized players is that they are going to increase their market share going forward from the unorganized players. But as I mentioned, the overall market itself is expected to be of a certain size, and a couple of these companies have already exceeded that market cap by quite significantly. Herrera was a very good listing, but again, I think the kind of moves that happened on Herrera, we were probably ensuring that we initiate coverage on that, but the stock just didn't give us a chance in terms of the moves that probably happened. So yeah, there are good spaces like Herrera as an example in terms of renewable financing. You probably got these pencil maker, but they have to cool down. So I think there are some qualitative stories out there, but valuations are just out of whack at this juncture.
Mayuresh, do you track AMI? I believe you had spoken to us about it the last time when you were in the studio, but do you track AMI Organics closely?
Yeah. So yeah, and I have a positive view. So let's put that on record. Obviously, I think the positives that are coming through, the MOU that has got signed in, lithium-ion batteries, I think a lot of developmental work is happening, and a lot of electrolyte and electrolyte additive salts is something that are going to get required for mass production of these batteries. So to that extent, the kind of expectation that one really builds in from this space when it comes to batteries and renewable batteries as well on the electrical mobility part, there can be good traction over the next few quarters. Again, I think they're into semiconductor business as well, and that probably also is a very high growing business going forward. The methyl silicate business, which is their bread and butter at this juncture, is expected to pick up over the next couple of quarters because even now what you're probably seeing in terms of specialty chemicals, the dumping by Chinese companies is largely over, but as restocking starts taking place, you're going to definitely see some expansion happening in markets. So this space looks very, very interesting. AMI Organics is one. You probably got Neogen Chemicals as well, which has already embarked upon a capex in electrolytes and electrolyte salts as well, and even Bhansali Engineering. So they are probably getting into the downstream products, which is a complete import substitution at this juncture as far as India is concerned. They are expanding capacities to probably suffice that requirements as well. And therefore, these spaces where specialty chemicals in real earnest would grow at a good pace over the next few quarters can continue doing well, and valuations for a couple of these players are also not that expensive. Just to answer your question, Taman, on this space.
Mayuresh, just before we thank you, a word on PSU banks. They are, I mean, historical biases notwithstanding, there is a case for some of these to do well.
Yes, that seems to be the case. And again, Neeraj, I think valuations are not too expensive at this juncture. Again, I think you have to probably be a little bit more selective out here. With the recent RBI circular that has probably come through, there is a certain element that CET1 ratios will get hit. And therefore, there will be some elements of raise that will come through. But in my opinion, because we are looking and staring at a rate cut cycle in the second half of the next calendar year, these equity raises will not be equity dilutive, but equity accretive to some of these companies within the spaces itself. And within the broader basket, I'll leave aside SBI because that might be a consensus call on the large cap name. Might be something like a Bank of India, where you've seen reasonable amount of growth coming through. in terms of advances. You've seen asset quality pressures come off quite significantly in the preceding few quarters. And the management sounds very optimistic in terms of a lot of recoveries and upgrades happening onto their book, which will directly add to the bottom line. Provisioning has been reasonable so far, and valuation still below book as we speak. So I think pick and choose within this universe itself. Bank of India is something that we like at MarketSmith.
All right. Thank you for that, Mayuresh. Great to have you on the show.